Would you like to have a checklist to get yourself ready for 2025, considering all the different aspects of life, financial, legal, taxes? Well, we've got it. And in this episode, we're going to walk you through some of these ideas, and then we're going to tell you exactly how to get the checklist yourself.
We hope you've been enjoying all the episodes from Secure Your Retirement. If you'd like to keep learning and receiving these episodes, hit the subscribe button and the bell so you receive alerts when they come out. We've helped thousands of listeners get on the path to securing their retirement. Now it's your turn. Let's dive in.
Welcome to Secure Your Retirement podcast. It is amazing to say this, but this podcast is coming out on December 30th. It is the last podcast of 2024, and it has been a really, really good year. We've gotten a lot of feedback on the podcast, really trying to just letting us know that the appreciation is really there for the fact that we do try our best to educate more than trying to talk about a specific product or specific strategy, although we did do a couple episodes that way this year. But what we thought would be a way to kind of close up this year and getting ready for 2025, because it will be here this week, is let's talk about what are some things we need to think about as we get ready to enter into 2025. A lot of people do spend some times there in the beginning of the year, really kind of doing a reflection, looking forward, saying, what can we work on? What are some things we need to think about? And so this is really a checklist. These are a checklist of items that you might want to have. In fact, we have this checklist that we are willing to share with you. So if you think, hey, I'd love to be able to see this checklist, help me get my brain together, we're glad to provide that for you. At the end of this episode, we'll tell you how to get it. So listen to the end, and we'll get this over to you. So it's broken down into a few different areas, and we're going to kind of take turns here going back and forth, but we'll probably have this as a conversation. So let's start by talking about personal things. So personal, think about things that's not money related necessarily, although it could bleed in. But really what we're talking about here is, I think the first thing that we like to do, we do it ourselves, is we kind of look back and say, what are some things that we did really well the prior year? So for us now, we're looking back and saying, what did we do really good in 2024? Now, you could do that if you have a business. You could do it if you're still working. You could look at it that way. If you are retired, you could look at it that way and say, what did I do in 2024 that I'm really proud of? Or what did I do in 2024 that made me feel good? And I would encourage you to write those things down, because you might think, I'll never forget about this thing or that thing. And then 3 years later, you're going, I cannot remember 2024 at all. So documenting that is I think a very important exercise. In fact, for me, I think it's such an important exercise. My personal goal right now is to journal and write those things down and help me think about what I've done that's really good, maybe things I need to work on, and then things that I'm looking forward to in the future. So take some time, reflect on the past year. Now, let's think about what would I like to accomplish in 2025. And again, these could be personal things. It might be milestone type events. We want to do a family vacation to a certain location. I have a certain project at the house I want to do. I want to help a specific charity. If I'm still working, I have a particular couple things I want to get done before retirement, and I'd like to get those things accomplished. It could be learning something. It could be a lot of different things. I might have a family member that's about to graduate, a grandchild or a child that's getting ready to graduate from college. It could be a ton of different things, but really write those things down. So you're planning your year out, you're putting all those things in place so you can make sure that you don't miss them. And we like to make sure that we recognize for our clients, but also for each other. One of the things that we recognize here in the office is we recognize each other on their anniversary of when they actually started working. And we celebrate that together. For each employee, they get to have a special lunch that day, and we usually try to do something nice just to say, hey, we're so happy you're here. You might think about little things you'd want to do for your family members on a couple different areas. And it can be simple things, but you got to write those things down and plan them out. Then there could be things that, as you think about the year, you think, well, how could this affect me on variable scenarios? This would bleed into some potential planning when it comes to income needs. Now, you might think about, do I have a particular project that I want to do? Maybe it's a redo of the kitchen or it's a upgrade on the house. And I think I need to make sure that I am talking to my financial advisor or that I'm planning it out so that we're ready for that. Because what we don't want to do is last minute say, I need this, and there was no thought put into it, because it is so much easier if you say, hey, I'm about to spend 50, 60,000 or whatever amount of money on a project. And we could have done it in a much more efficient way if we would have had a little bit of time to know about it and think about it. So that's kind of some of the personal things. Like I said, on the checklist, you'll have all the details there on that. But now that takes us to our next one here, which is about cash flow.
Yeah, cash flow, I think, is very important to always be revisiting throughout the year, a couple of times a year. And definitely at the beginning of the year, as we start to think through, well, what's going to come up? What are our goals for this year? A lot of people walk into a new year with resolutions. We've all heard about resolutions and how aggressive we can be on those. And I would say make them attainable, but definitely, like Raiden said, write them down. So cash flows, the way I look at cash flows is pretty simple. What's coming in the door and what's going out the door. And if we have a good way of tallying those up, then we can say, well, what's different from last year, and coming up with an idea of, are there changes to our income? Is our income going up for some reason? Did we get a raise through work or, job change or anything like that? Or is it going down for some reason? And do we need to make adjustments on the other side of the coin, which is what's going out the door, our expenses? So understanding the dollars that are coming in, but just importantly, understanding the dollars that are going out. My wife and I, we actually just did a little bit of a reconciliation of you see all these things that we subscribe to these days that cost a couple bucks a month, but if you look at the subscriptions, they start to add up, between your Netflix, your Hulu, your Apple Plus, your Amazons, all these different things, and they start to tally up. And I think it's good to ask the question every now and then of, hey, are we actually using these, or what are we giving away money to that we're not getting any value out of? So we came up with a couple that we said, oh, I didn't realize that we were still paying for this. And so the goal is walking into next year is to get those off of our budget. So just, budgetary type of cleanup items are only going to make your cash flow more efficient and more effective and simpler. So yeah, understanding what's coming in the door, what's going out. Do you need to review your employee benefits? Have they changed, or are you making more money, which allows you to save more into your retirement plans, and vice versa? Did our income drop, or do we expect it to drop? Do we need to adjust our savings into retirement plans? Did employer matches changes? Did some people have access to HSAs, FSAs, all these different things that you contribute to throughout your payroll? And those are going to be relying on what's coming in the doors from a cash flow perspective. So understanding those, and the numbers change around a little bit as well. So how much you're able to contribute typically is affected year over year. If you're able to contribute to an IRA, so this is outside of an employer plan, an IRA is an individual retirement account. And so if you're able to contribute to that, always look at doing something like that. There could be tax benefits from a upfront deductibility, or if you're putting into a Roth, you get tax-free benefits. Something to not forget about is maybe you're earning and working and maybe the spouse is not. But if you're married filing jointly and you have enough earned income, then you can also do a spousal contribution as well. So don't forget about that. And then always savings is really important as we walk into the year. What are our savings goals? Are we going to achieve those this year? And then that lines into goals for the year. Are we traveling? Do we need to save towards a certain line item for travel? Or, do we have a big life-changing event coming up like a house purchase or an investment property purchase or kids going to school or big gifts that we want to give this year? Always be thinking about that. If we're charitably inclined, let's try to understand how much we're giving in a year. And if there's a better way to be doing that, either through donor advised funds or through qualified charitable distributions. If you're of a certain age, these are all things that I would think you want to be talking to and planning with your advisor or the professional that you work with. So those are just a handful of cash flow issues. I know every person is different. Every situation is different. But these are just a few to start thinking of as we walk into 2025.
All right. Our next topic here is assets and debts. So just a couple things to think about. Maybe you had a couple of events in 2024 that took down some of the money that you had in the bank. Maybe you had a larger cash reserve. Maybe you went on a vacation. Maybe you gave a bunch of gifts away here at the end of the year, and you used up that cash. And you like to have a little bit of cash in the bank that's readily accessible, review that and go, hey, okay, I'd like to have that. I think if you are working with somebody that's a financial advisor, if our clients were to call us up and say, hey, I'd like to have my cash reserves replenished, we like to talk about a strategy about how to do that. We don't want to trigger a taxable event. So you wouldn't, in my opinion, say, okay, right now on the 30th, let's go replenish if I'm going to have to sell assets to do that, because that would trigger a taxable scenario for you this year in 2024. So wait till into 2025. Then there might be other considerations. How's the market doing when you decide to do that? Should we do it over the course of a few months, not just doing it one time? So all those are things that we need to think about. Here is a really big one because it's a big tax planning thing, and this won't apply to everyone. But if you are planning on either buying or selling a business in 2025, before you get a sales agreement, before you have that you want to talk to an advisor to make sure that you're looking at that whole picture, because there's things you can do ahead of time that could be way more beneficial that you cannot do if you've signed an agreement. Another one is to review in your investment strategy, your risk exposure. We talk a lot about this with our clients, and every single year we're going to revisit, is risk where you want it? And the reason why that's so important is if I am getting closer to retirement, I may want less risk. I may have decided for some reason I want to increase my risk. It doesn't matter, but you want to review that. And then we're going to talk about things like rebalancing your portfolio, but from a risk perspective. Now, think about it. 2024 has been a really good market return. We've had good returns in the market. So that means if I was in an allocation that had some money safe and some money that was out there growing, I'm going to be out of whack right now because that growth account is going to have grown and my conservative account would not have grown as much. So I might be a little out of whack on what that allocation would need to be, and we would want to do a rebalance. That's going to be a very big topic for the first couple of months with our clients, is making sure we look at that risk exposure and doing a rebalance there across that. If you did take out a mortgage at the peak interest rate because you just had to go get something, is now a good time to refinance the mortgage? Well, that's something to discuss. Not saying it is, but it's something to think about. Are there things that we want to think about as far as debts? I mean, we have clients all the time who have that last little bit left on the mortgage. Should you go ahead and eliminate it now, or do you want to keep it? All of these are different things that we would want to do. One other thing, at least once a year, if you don't have a subscription. I have a subscription that tracks my credit score, and I get any kind of an update through FICO that will update me if my balances change, if my score changes. And I think that's really important today because it would alert me right away if some weird activity was going on and my identity had been put at risk. I'm going to know it the day it happens because anytime new credit is applied for, it shows me immediately. So at least once a year, though, at least run a credit check and look at your credit report and say, is there anything going on here that's weird? And I would do that at least once a year. And if you want to subscribe to something, do that as well. All right. I think that takes us on to our next one here, Merce, which is tax issues.
Yeah, tax issues. That's something everyone likes talking about. Everyone likes taxes, paying taxes, and getting ready for tax season, which is in April. I will go ahead and foreshadow a podcast that will be coming out not too shortly after this one, maybe a few weeks from now, which is going to be all around, well, what do I need to have prepared, have documented in order to make my tax return process filing simpler and easier for either myself, if I'm filing for myself, or if I'm working with the CPA. What are all the things that are needed to get all this accomplished? Gathering the 1099s, the W-2s, charitable donations. We're going to do a whole episode around that with our very own Taylor Wolverton, who is an enrolled agent, and she kind of walks through what you would be wanting to put together there. But yeah, as we sit here, December 30th, walking into 2025, you'll start receiving those documents, the 1099s, the W-2s from your employer and all that. So you want to start gathering and getting ready for tax season, which then leads me to another tax episode that we will be doing, which is understanding your numbers as we walk into a new tax year. Tax rates haven't changed, but tax brackets, as far as the dollars, have moved around a little bit just due to inflation and things like that. So you always want to know where you fall in your tax bracket, and realize that moves every year. Also, every year, typically, we're having a change in contribution limits when it comes to 401ks, IRAs, HSAs, FSAs. All these different things are tax law changes or tax number changes that we want to understand. So we're going to do a whole episode, separate episode, on just knowing your 2025 tax numbers. So if you do those two things, get ready for the tax return and know what your tax numbers are for 2025, I think you've had a really good start into the year. Other things you want to be thinking about walking into 2025, the most common thing that we're explaining and talking with clients around, and when it comes to tax strategy, is Roth conversions. Doesn't make sense this year. Did we have a drop in income? Do we have extra deductions, things like that can make a Roth conversion rather attractive? So be thinking about that. The deadline for those are at the end of the year, so you want to do some proper planning and don't miss out if there's a good opportunity on Roth conversions, which, by the way, that's taking money from a pre-tax bucket, your 401k IRA that we have not paid tax on yet, deciding that it makes sense to pay the tax, and then getting it shifted into a tax-free bucket, which is the Roth IRA. IRA contributions, if you forgot to make one in the calendar year 2024, what's nice about IRA contributions is you have until tax filing date, which is in April for most people. You can still make a 2024 contribution in 2025. That's an IRA contribution, not to be confused with the IRA conversions that I was just talking about. Conversions is 12/31 deadline. Contributions, you have up until your tax filing day. And then another one around taxes is understanding if you have brokerage accounts that are non-IRA, we call them a brokerage or taxable or non-qualified, getting a grasp as far as what your realized capital gains are, your unrealized capital gains. Are there any strategies that we can employ this year as far as tax loss harvesting? Are we going to need to liquidate any of that year for a potential purchase? Maybe we're buying a car, buying a house, have a big party that we're throwing or something like that. We've earmarked some money that's been invested. In order to get to it this year, we're going to need to sell some of that, which may generate some tax. So you want to be thinking about what that number is and what's it going to cost from a tax perspective. And in general, just staying on top of, it could be as simple as, are my withholdings in line? I take Social Security, I got pension, I withdraw from my IRA. I end up owing a lot of money at the end of the year, which means my withholdings are probably not high enough. Or it could be vice versa. I get a massive, massive return on my tax return every year, and that may mean that I'm withholding too much. So walking into January, you can make it as clean as possible by evaluating your withholdings to get them in line. Ideally, for most people, I would say they want to kind of break even on their tax return, not get a huge return, also not owe a bunch. That's called breaking even. So those are a few things to talk about. We'll get into way more depth on some of the tax podcasts we have upcoming.
All right. This one's not probably like an overwhelming one, but it is at least one to think about, and it's our insurance issues. If you're turning 65 in 2025, I will encourage you to talk to a Medicare specialist well in advance. Now, if you're thinking who's out there to do that, I will just go ahead and tell you we have a Medicare specialist here on the team, Sean Southard, and he is very good, very patient, extremely good educator. And so I would not wait on this. I mean, if you're going to turn 65 in 2025, I would reach out right away to get the conversation started, because there are so many variables there. If you would find out that you are going to either be taking an early package in 2025, maybe you're going to go ahead and retire prior to 65, we also help, and you can, I'm going to say talk to anybody, but Sean also helps people in what we call that gap period from whenever you would retire to 65, because you're going to need health insurance there as well. So you might want to review that. I would say also a big topic for us this year, because there are so many different policies types of policies that have come out that I think are way more attractive than they were in the past. But have I looked at long-term care insurance? We are going to spend the first quarter really talking about long-term care coverage and the ways you can do it not the old way, but the newer way. And is it something we should consider? And then finally, real quick, home values have gone up considerably. A lot of times your property and casualty companies try to keep up with you, but if your house has gone up a lot in value, make sure your property, your insurance on your home is keeping up with those increases, because you want to make sure those values are correct. All right. I think this takes you to the last one, Mert.
This is our last one, and this is the estate planning side of your life. So when I say estate, that's most people kind of go to wills, trust, power of attorneys. How is my money going to transfer if something happens to me? That's your estate. So making sure that's in line, making sure we have those documents in place that are still relevant to what our life is. Way too often we see beneficiaries that are not exactly the way that people thought they were. So as part of our process, we do an annual review on beneficiaries for our client accounts, making sure that the people that are listed are exactly the intention of the client. Has there been change? Has there been death in the family? Has there been divorce in the family? Have new kids or grandkids been born that are not currently recognized in the estate plan through beneficiary designations or through the wills or the trust or anything like that? Did we set up a trust last year, but we haven't really started funding it? Well, what does funding mean? That means actually getting things retitled into the name of the trust. The most common one to forget about is I created this trust so that my house passes nicely through avoiding probate, but I never actually got the house retitled into the name of the trust. So titling issues, again, are a big deal that can be overlooked sometimes. So just review how everything is set up there. Power of attorneys, has there been a change? The person that you appointed, do we still think that they're in a place to take care of you if you're not able to? So just always reviewing your estate plan and the way that you want things to go, because it's very difficult to make changes once you're not really in a place to be able to mentally, and if you have that capacity or not. So staying on top of that's huge. Are there any new laws going into effect that might impact your financial plan? On this one, I would say we just need to stay on top of it. There's just been, we're sitting here on December 30th and 2025. We do have a change in leadership for the president. And there could be some change coming down the line over the next 4 years when it comes to all types of policies that could be put in place. So paying attention to that and adapting, I think, and being reactive to it as we make changes. There's a lot of stuff out there that could happen. I wouldn't try to guess and make changes ahead of time as things come down the line and changes are made from a law perspective and a political perspective as those come down the line. Then I think it's time to react and adjust. And then if you own a business, are there things that you expect different this year than last year? Are there liquidations? Are there higher income? Are there, anything out there that could change your bottom line for the business? Are there strategies that we could put in place? Things like that. Always be thinking forward when it comes to your business and anything to make it more smooth and efficient. But that's the big things for walking into 2025. Again, it's not an exhaustive list, but it'll get you on the right path. If you walk into January having thought some of these things through, I think you can feel a lot more comfortable as far as what 2025 could bring.
All right. So I told you we have this checklist, and there's a couple ways you could try to get it. Probably the easiest one would be to email us at info@pomwealth.net and just say, I would like to get the 2025, what to consider for the 2025 year checklist, and we will email you back. If that, though, is not what you'd like to do, you can give us a call as well at our office, 919-787-8866, and just say, I'd like to get this checklist. Either way, we will get it out to you, and you'll be able to have it all right there in front of you. But if you would say, I'd like to have a conversation with you, you can do that also. Go to the top right-hand corner of the website, pomwealth.net, and click on Schedule Call. Our calendar comes up, and we are more than happy to answer any questions you might have about this or any other issues that you might want to talk about. But thank you very much. It's been a great year. We look forward to talking to you again next year. We hope you have enjoyed this episode of Secure Your Retirement. If you would like to learn more, we have actually created an online course called 3 Keys to Secure Your Retirement. This video course helps you to think through all the different steps as you get ready to plan for and live throughout retirement. You can access this by going to our website, pomwealth.net. In addition, you can also subscribe below to our podcast called Secure Your Retirement.
For more retirement tips, check out these videos. Also, if you find them valuable, please subscribe to our YouTube channel and give us a like.